right. Yeah, thanks. I really appreciate you guys joining me. And so I'm going to show you a little about what I'm doing and how I make money in small apartments. And, if you got any questions, feel free to throw them into the chat, or afterwards we'll have a open discussion and go over everything. But a few things we're going to cover: a little bit of background about myself, why we're here, and why now, how we make money, and what the next steps might look like. So a little bit about me. I'm 42, happily married with 2 kids. And I've been a contractor and a realtor and an investor for almost 15 years now. Well, actually over 15 years. And actually just recently I became a #1 best-selling author. But as my time as an entrepreneur, I've realized that out of the businesses I've been involved in, real estate is really just what makes the biggest difference for me. It's what's created essentially financial freedom and time freedom, opposed to the businesses that I've run in the service businesses. So it's a little bit about why I like it so much, but over 15 years, I've built up a pretty strong portfolio, and we're growing it. So developed a proven track record. And, as a business owner, I've run several, we've gotten several awards locally and nationally. I've been invited to speak on several podcasts about business and real estate entrepreneurship in general. And a little bit about why I do what I do. People ask, well, you've got all this going on, you could kind of coast a little bit. Why do you keep pushing forward? And the reality is I have a passion for helping other people, and I'm trying to go bigger and better. So I am personally pursuing my best self and my full potential. And in that is really doubling down on everything that I'm doing with real estate. So clearly, to build up a real estate company, you've got to have a good support team. And over the last 15 years or so, I've put that together. These are a few people on my team. Patty owns the property management company that does most of our property management work. Michael is our attorney. He puts together all of our legal documents. Warren's our CPA. He makes sure that we are, getting the most favorable tax treatment in everything that we do. Colin is one of the brokers that we work with. And what I love about him is he kind of dials for dollars. He's a hustler. He's out looking for off-market deals. And we actually met with one today. But he's one of our sources for finding distressed properties and motivated sellers. Chris is our banker at First Bank. Every loan that we do, we shop out, but we've done a number of deals with him. We've got a really good relationship with First Bank. Shane is here, and he does a lot of our property inspections and makes sure that we're uncovering everything and not going to have any unforeseen issues. And then Carrie owns the bookkeeping company that does all of our books. And I've worked with this team here for many years now. So why real estate? Really, they say any time is a good time for real estate. And if you look at some of the most famous quotes by some of the most wealthiest people out there, they'll tell you that the time that you're in the market is way more important than trying to time the market. So that's really the first thing. Second thing is control. Me personally, I like to control my assets. And so when you own real estate opposed to a stock or some other form of investment, you can negotiate a better price. You can add value by improving the profits. You can manage it better. So there's a number of ways that you can control things and control the performance of your asset. Real estate is real property. It's a tangible asset. The returns in history have been proven to be more than stocks and bonds and leverage, which is beautiful. So the banks will give us a large portion of the cost to buy property, and we get to keep 100% of the profits. And then lastly, but definitely not least, is in real estate, we have multiple profit centers. So every property that we buy pays us several different ways, and over time they compound to make some serious returns. So a little bit more about the profit centers in real estate. It starts with buying it right. Usually when we're buying a property, we're looking at a distressed situation or a motivated seller. And generally we can get it at a discount and have what we call instant equity. And then the use of leverage, like I mentioned, the banks nowadays might require 30% down, but that means they're giving 70% of the funding for the property, but we get 100% of the profits. Cash flow is similar to what you might see as like a distribution or a dividend. And that's what pays us along the way as we hold the property. Principal pay down, every mortgage that gets paid by the tenants, a portion of that goes to the principal pay down, and that kind of acts as an automatic savings account for us, which over time adds up to be a nice chunk of change as well. And then there's tax advantages for real estate investors. The government wants us to provide housing for the public. And because of that, they give us some pretty significant tax advantages that you just can't get in other investment vehicles. Then there's appreciation. And over time, naturally, real estate does tend to appreciate. Even if the Fed gets their inflation target inflation rate down to 3%, or whatever it may be, 3% compounded over 5-7 years is a pretty significant amount. And then reinvestment, we've got options. When we are done with the property, we can sell it or we can refinance it. And there are some tax favorable ways to reinvest the proceeds. So why Phoenix? Clearly, I live in Phoenix. Some of you guys live in Phoenix too, but I don't invest in Phoenix because I live here. That's kind of a bonus, but it's really just overall a great place to invest in real estate. It's kind of got a sweet spot where you can get cash flow and appreciation, opposed to other markets where, like along the coast, you would, if you're investing, you're probably going to have negative cash flow and you're hoping for appreciation one day down the road, or in the Midwest, it would be the opposite. You'd probably have a higher cash flow than here, but probably very little appreciation. So otherwise, Phoenix is really just, it's bringing in a lot of businesses. And when there's a lot of businesses here, that means there's a lot of people working. And when there's a lot of people working, there's a need for housing. So why do I focus on small apartments? There's a ton of ways to invest in real estate. And what I've come to learn over the years is that the small apartment investing really has the best risk reward profile out of any investment that I've come across. It's never 100% vacant unless you're doing a major renovation at the beginning, but it's not like a single family home where somebody moves out and you've got a month or two of vacancy. In the small apartment space, we're not competing against the big players and we're not competing against the small players. So we're in a little niche here. And over time, we really just let time do its thing. We let the multiple profit centers compound and we let time do its thing. There's pros and cons to everything, right? I feel like there's a ton of pros financially with small apartment buildings, but there's cons. So you've got all the repairs, the responsibility. You've got to have a 24/7 hotline for emergency calls. You do have vacancies. You do have turnovers and stuff. And so here is kind of a map of the process that we go through when we buy properties. First, it starts with finding the deal, which is not exactly easy. I might get one deal for every 1 to 200 offers that I put out on the table. But once we do get the one that we want to move forward with, we tie it up under contract. We'll go through and do our due diligence, do the inspections. If we're checking on zoning or anything else, that's done in the due diligence period. Then we'll go ahead and close on it. Afterwards, we'll do renovations if needed. Not all properties need major renovations. And then the tenant screening, generally we're buying properties that are mostly occupied. So it doesn't require a whole lot of leasing, but sometimes we need to replace a bad tenant or two or fill 1 or 2 units. And then we just hold the property. And we usually are looking at a 5 to 10 year hold cycle. We enjoy cash flow and appreciation along the way. And then afterwards, we'll refinance or sell. So what's in it for our investors? Well, it's basically a passive investment. You get to, share in the cash flow and distributions along the way. And then when we do sell or refinance, all the profit is split and we handle all the work. My team, all the people that I showed you earlier, we take care of all of the headaches and issues. So there's essentially three parts to real estate, right? You've got the property, the deal, the management, the ongoing stuff. You've got the team and the vendors and the resources, and you've got the money. And I basically take care of, those two, and the investors provide the money, and we split the profits 50-50. And you'll see here, I've got some sample deals that there is plenty to go around in the right deals. So no two deals are exactly the same. That is for sure. Every deal is going to be different. These are some real deals that I've done that I'm sharing here. This is one that we actually closed on maybe 6 weeks ago, or 6 or 8 weeks ago. And it's 3 units plus a workshop and about a ½ acre of land. We bought it for $525. Total cash in that we needed is about $170. The bank provided the rest. We bought this, we got instant equity. It's actually worth as is $695. The mortgage on the property is $393. And so if you calculate a 5-year mortgage pay down, it's $18,000. We're projecting a net cash flow over 5 years of $70,000. And then if you just add on basic 3% appreciation, that would be about $280,000 in equity over 5 years. So the 5-year plan for this property, the investor invested $170,000 in capital. And after we return that, this is kind of the projections, the return for the investor. So an additional almost $35,000 in cash flow, $9,000 in mortgage pay down, $140,000 in appreciation. So a total of about $185,000 return on top of the $170,000 capital that was put in. This is another property that we bought a couple of years ago. It was 8 units. We bought it for $720,000, and total cost that the investor put in was about $238,000. And this is the 5-year pro forma on that. We still own the property. We put $237,000 in, and we're projecting to pay the investor back $250,000 over 5 years, which breaks down to about over, doubling their money and about 20% average ROI. And then this is a third deal. This is one that we still own as well. We bought this maybe 5 years ago. It's another 8 units. We bought it for $530,000. The investor put in $138,000. This was the 5-year pro forma. So we were projecting after 5 years to provide the investors $138,000 back plus another $75,000 in financial benefit, which worked out to be about 10 or 11% annual ROI. So nothing too crazy there. But after 4 years, we did actually refinance this property. And what we did was we took all of our money out. We paid the investor back, and there was additional profits to be paid. So this is the actuals here after 4 years. The investor got $138,000 back and $105,000 in tax benefit. And we still own the property right now. And so we've taken all of our money out, and it's going to continue to provide. We're expecting $10,000 to $12,000 in cash flow. It's going to continue to appreciate. We're going to continue to pay down the new mortgage. So we call this an infinite return. And so those are the 3 sample deals that I've got for you tonight. What we're looking for, honestly, is we're looking for investors who can invest $100,000 or more into a long-term 5 to 10 year outlook for a real estate investment without it being a huge strain on their finances. Sources of underperforming funds. When I look at where is my money working harder, more efficiently, more effective than other places, this is where a lot, I have money, and a lot of people do. So cash in the bank, you can get 5% cash in the bank for sure, but you can get 20 to 30% putting it into a real estate deal. So me personally, I always try to limit what I've got in the cash to just what I need in liquid reserves. IRA and 401k. I have a self-directed IRA, and I used to have it in mutual funds making 2 or 3 or 4%, but I've redirected that, and I invest with other real estate investors because the tax laws don't allow you to invest in IRA in yourself. But it's a way that I've exponentially grown my IRA that most people never even think about. Home equity is usually an untapped source of funds. if you've never heard the saying, the equity in your home, the return on your equity is always zero because it's not working. So that's always something to consider. Stocks and other investments may or may not, if you're not getting 20% annual ROI or more, might be time to reevaluate those funds you've got there. So our investor involvement, really all we're looking for is a financial investment. We take care of everything else. Depending on the deal, you may or may not need to provide some information for to qualify for the mortgage or co-qualify or just provide a financial statement. But I take care of everything else, essentially. So what are the risks? There's definitely risks with every investment. I mean, I do everything that I can to minimize it. I am conservative by nature. My first real estate deal was in the housing boom and bust, and that's kind of what shaped my portfolio to be what it is today. But what we do for the investors is that we make the investors a partner in the buying entity. We create a new LLC for each property, so you actually have real ownership, and everything's done with legit legal documentation. So what if I go out of business, or if I get hit by a bus, which might be more likely than going out of business? Since the investors are a member in the entity, you can continue renting it out because it's professionally managed, and once it's stabilized, it's pretty much hands off. Or you could decide to sell it. The real estate market could crash. You know, I don't have a crystal ball, but I wouldn't be doing this if I thought that. I went through the last boom and bust firsthand. And I'm pretty confident that the next 2 to 3 years are an incredible buying opportunity. But the reality is we're not doing this to flip houses. We're not really doing new construction development. Buy and hold small multifamily apartments are honestly, to me, the safest investment. It's a long-term strategy, and we just let time do its thing. And we're not getting risky loans. We're actually looking for non-recourse loans, but it's all longer-term stuff. The rental market could go down, and honestly, the rental market is pulling down. It's softening a little bit. Yeah, rents are not going up. They're coming down just slightly. Occupancies have gone up just a little bit. But the reality is there's still a massive undersupply of demand in what we're doing right now. Specifically, if you couldn't tell by the pictures of those properties, we focus in safe and affordable workforce housing, right? And so there is definitely not a shortage, or there's not an oversupply of that. And so to me, it's a pretty safe investment, just for that specifically. There could be unforeseen problems, absolutely, but you know, we do everything we can to catch that up front. We do build in a reserve fund to make sure that we're covered. And you know, we're looking for cash flow as our primary consideration, which is actually additional safety for any unknown repairs. And we've got a team of people that do this stuff all day. So I've got really good control over vendors and contractors for whatever we need done. And what's really cool is our insurance. If the buildings go up in fire, it includes loss of rent coverage. So worst case scenario, we still get paid rent. Tenants do damage properties. This happens for sure. Again, it's why we got the reserve fund. We take deposits for each tenant, and we practice good management. And you might find that you don't like working with me, which is part of why we want to make sure that our goals are aligned. That's definitely not what we would look for, but really my goal is to do multiple deals with every investor that wants to do deals and get referrals. So I'm going to try to make every investor as much money as I possibly can. So the upside, we split profits 50-50. Multiple streams of compounding income for each property. I only make money when the investors make money. And then once we sell or refinance, the investor gets paid back first, and then any additional profits get split 50-50. So I do everything. My team does all the landlord stuff. It's completely hands-free investment, backed by real estate. And why me? There's other people that do this. That's not a secret for sure. And I invest with other people that do this. And I have friends that do this on a much bigger scale. And what I've learned is that the other people that I've encountered with, there's a serious misalignment between what they're doing and the investment, because they're getting acquisition fees at the get-go, 2 to 4% acquisition fee, even though they're paying brokers. They're going to take a disposition fee from 2 to 4%, even though they're paying brokers. They're going to get ongoing management fees, even though they're paying a management company. They're going to charge the entity their travel fees to go check on the property and probably go out and have some meals with their team. And that is their source of income. So they need to do deals in order to pay their bills, essentially. And so to me, that was a total misalignment. And anybody that's been doing this at a really high level for the last 3 years undoubtedly has serious financial distress in some of their loans coming due. On the other hand, for me, the way I've structured this, I work for free until the investors make money. Literally, I don't make a dime until the investors make money. I do most of the work up front, finding the deals. I'm incentivized to build long-term wealth, not quick income. My bills are paid by my other businesses, so I don't need to do a deal. I just love the hunt. And when I find a deal that can make a lot of money, I love to strike and jump on it. I have control of the renovation crews, which is awesome. It's way more convenient than you might understand. And I've experienced the last boom and bust firsthand. So it's really shaped my entire philosophy and methodology in what I do today. And I have no over leveraged properties or risky loans coming due. So, a lot of people in general, they talk about, oh, that sounds so cool, but I don't know if, for now. And so my only advice to that is, it's not time. You can't time the market. I look at real estate investing as dollar cost averaging, which most people refer to as, or think about that in the stock market or in their IRAs. But if you're investing into real estate every year, you're going to buy some on the high cycle, some on the low, some in the middle, but you're maximizing your time in market. And when you're maximizing that time in the market, you're allowing the compound effect of all of those streams of income to work in your favor. And so that's kind of been my philosophy. And that's it. So I appreciate you guys listening in.
Very good, Pete.
Any questions?
Applause, everybody. Good job for Pete.
Good job, Pete.
You'd never know that was your first webinar presentation, my friend. Here I was supposed to be his co-host. I didn't say a damn word. But that is great.
Impressed, Pete.
What's that?
Impressive, Pete.
Yeah. Thank you. Yeah, thank you.
So we're going to open up for Q&A, right, Pete? And what I'm going to do, you guys,
Sure.
is if you're shy, or better yet, if you want to have a one-on-one conversation with Pete to see how this might work for you, then go ahead, book a call with Pete. I just put a Calendly link in the chat box. You can click on that. If you're in the Phoenix area, you guys can get together in person for a coffee. That's always great. Or if you're not, or it doesn't work out to be convenient for you, you can book a one-on-one conversation on Zoom. And then that way, Pete can dig in a little bit deeper into your particular situation and see if this is a fit. But in the meantime, if anybody has a question or a comment or anything wasn't clear with what Pete went through there, feel free to either type it in the question box or just unmute yourself. And that's what we're here for.
Did I miss something? How does Dave fit into this picture?
Yeah, that's a good question, Mike. How do I fit into this one? So I was supposed to be Pete's co-host here. I met Pete about 6 or 7 months ago. I had him as a guest on my podcast. We've gotten to know each other a little bit since then, helping him with some marketing stuff. So yeah, we jumped on here to help him, like I said, be the co-host of this presentation, but he didn't need that help. So he ran with it. He did a great job.
Thank you.
Yeah.
I have a
Hello,
question.
go ahead.
Go ahead. I have a question, Pete. Say I invest in this and something happens that me and my husband were to pass away before it's over. Like you said, you could get hit by a bus or whatever. What happens to my share if that happens, or our share in the business?
Yeah, it's a good question. I mean, I think basically the way the legal documents are written is that, you know, that would pass down probably to your heirs, however you've designated in your estate, your share in the deal. Yeah. And so any ongoing distributions or profit share would get passed down to whomever, you know, your estate designates as your heir.
Whatever the will says, right?
Okay.
A will or trust or whatever. So I have a couple of questions. I think, you know, you went kind of fast for me. So if we go back to the, your definition of apartments, does that include, like a B and B type rental, or are they all multifamily, entities?
Yeah. So small multifamily really could be anywhere from 2 attached units to maybe up to 50 or 75, depending on somebody's definition of small. But generally what I'm looking for is usually I'm looking for 5 to 20 units maybe. But they're yeah, it's not short-term rentals. That's not what we're doing. They're long-term rentals.
Okay, so long-term rentals, and then, you know, kind of on the 5 to 10 units that you get, you know, when you're paying rent on, right? Or people are paying rent on.
Yeah. Yeah. We're
Now-
looking at one this week that's 77 units. I would consider that small. Some people
Okay.
wouldn't, but yeah.
77? Okay. How about, if you go back to your screens that show cash flow, could you give me a more detailed definition of what you define as cash flow?
Yeah, cash flow is basically what's left over every month or every quarter. We do distributions actually. So cash flow is what's left over after you pay the mortgage, any repairs or expenses.
Okay, so
And
on
so
the,
generally when we're buying properties, that's our number one consideration, is that it's got to be cash flow positive, or there's got to be an easy path to positive cash flow. So like this property here, when I closed on it, it wasn't, but we made some minor repairs and we put together my leasing strategy, and now it's cash flow positive within 6 weeks.
I see it as, you know, it's like, I guess my definition is more revenue. Your revenue is, that's your positive revenue on a monthly basis.
This is what's left over to
Net-
share.
Yeah, your
This
net,
is the
your
yeah,
net
this is like the
return.
this is like the operating profit.
yeah, so your operating profit or your net return on a monthly basis is that dollar amount. And that's a monthly dollar amount, correct?
No, that's 5 years.
This right here is over
example-
5 years. Yeah, this right here is
Oh,
over
that's a
5.
5 year. Okay, so
Yeah.
over 5 years,
Mhm.
you totaled the monthly profit over 5 years, and it's that number.
Cash flow. Yeah.
That's the cash flow.
Yeah.
And so your ROI, how do you figure the 20%? That's 20% of what? What you
Of
What was
170
paid
of the cash invested.
of the 170?
Yeah.
Okay.
Over the
Yeah,
5
so
years.
the cash flow is one slice of the pie, right? And it's nothing amazing on its own. Generally, a property should be able to yield maybe 5 to 10% cash on cash return. And yeah, that's one slice of the pie essentially.
Well, yeah, there's the slices are there. It's appreciation, and your total return on investment is a certain dollar amount, right?
Yeah.
Well, your pay down. Okay.
Yeah. So here's the other one. So this one had, yeah, average annual cash flow at about 6%. Yeah. So the cash flow is, it's one slice. of the
Sorry,
pie.
I'm a
Tied
numbers
this
guy,
over.
so give me a minute. I'm a numbers guy. Let me go through this and digest it a little bit.
Sounds good.
Yeah.
And this would be a really good thing, Ray, for you to jump on a call with Pete, because Pete's a numbers guy
Yeah.
too, and he's got spreadsheets galore. So he can share the actual spreadsheet with you and go through it line by line. And
So we can see,
yeah, that-
okay.
Well,
so yeah,
like I said, every deal is different. No two deals are the same.
Oh,
And,
yeah, I know.
you know,
yeah.
when I'm analyzing properties, and even when I'm like, even if I'm bidding a large paint job, right? Any investment and there's a portion of it is math, and there's a portion of it that's art and just kind of like a gut feeling, right? And so you pencil it out, you've got some variables, you think it's going to do what it's going to do. Things might change, but there's also like the intangibles and the variables. But every deal that we do a full pro forma on, and when we've got it under contract, we're definitely happy to share our projections.
Okay. Okay, I'm good now. I think you answered my questions. I appreciate it.
Cool.
Awesome. Billy?
Bill.
Yeah, so what kind of describe the type of investor you'd like to work with, Pete?
Well, like I said, really anybody who's got $100,000 or more that can invest long term and has a similar mindset, you know, in terms of waiting for the second marshmallow, building wealth long term as opposed to a quick flip. That's what I'm looking for.
Are you looking for people that are going to invest like consistently in your projects? So you like to have people that kind of jump in, do one for a little while? How do you look at it?
Yeah, I'd love to have somebody that wants to continue to invest. Absolutely. But one-offs are fine as well. I mean, clearly it starts with a one-off and then it's my job to deliver. Right. And if the investor feels like I'm doing a good job and they're confident in what I'm doing, then I'm pretty sure they're going to want to invest more, because you can't do this. You can't make returns like this in your Fidelity money market.
Right.
You really can't make it in the stock market, you know?
Not
So
consistently.
yeah.
I have a question, another question for you.
Mhm.
What are the penalties of like 401k taking money out to invest in this? If I, do I have to pay an
That's like detail.
I don't know. You'd have to check with them, but there is a way that you can convert that to a self-directed one and invest it through your 401k. And I can put you in touch with a company if you want to explore that.
And there'd be no penalties in that case.
62 now, there's no penalty.
Good
Well,
question.
It's good questions for sure.
uh,
Pete, what's your take on the housing market for the next couple, 2-3 years?
You know, I think most people are scared to buy, and I think it's not easy to make deals happen, but there are deals to be had. I just made one. I've got 2 potential ones coming up. So I think if you've got good criteria, strong criteria that you stick by, and you turn over enough stones, there's some diamonds under there. And that's what I'm searching for. We just got a diamond, and I've got potentially one more coming up. We're in the early stages of it, but they're there. And so if you can make it work with today's interest rates, if and when the rates do drop, it's going to be even better. And I'm not banking on the rates dropping. I think the rates are going to stay fairly close for a while. So yeah, I think there's a lot of opportunity.
Would you say a lot of other investors are kind of running scared right now, Pete? A lot of the less professional people.
The amateur investors are not competing right now. The big time guys are, not competing as much right now. So there's opportunity for sure. Yeah.
What's your source? The best source of finding these deals, Pete?
yeah.
Off market, that broker that I showed you earlier, Colin. I mean, he literally, so we bought this property 8 weeks ago. He found it. He had been talking to the seller for months and months. He brought me in. After I closed, I said, hey, I want to buy more properties on this street because they're all really big lots. And I got a smoking deal on this, and I knew there's more opportunity on that street. So he literally, he's got systems where he'll pull the owner's phone numbers, and he's been calling all the owners. And finally we got a bite off of his fishing pole. And
Nice.
so we're gonna nurture this one. But I mean, even me, the 2 neighbors on the adjacent side, like I set them up to send mailers. I sent them a nice little letter, introducing myself after the closing. So we're going direct to sellers. I am a realtor and I have access to everything on the MLS. And in multifamily, you're not getting a deal if you find it on the MLS. You're just not.
Right.
So we find the sellers that have distress, a lot of times they need to sell quick, and I need to be able to pounce on it, and with a cash offer or some kind of creative deal. They either have distress, like a reason to sell, or they've got a ton of equity, people that have owned the property for a long time. If they've just bought it in the last year or two, there's not enough skin in it for us. So,
Hey, show the next slide there, Pete. What the instant equity is on this property. So,
oh yeah, this was incredible. So, and then to give you an example on the cash flow, like this one, our mortgage is about $3,000 a month. And I just got the rents up to 5,000. And in the next 4 to 6 weeks, I'll have them up to 6,000. So like when you talk about a return on rent, that is unheard of out here. Like it is extremely hard to exceed the 1% rule. Back in the day, the golden rule was the 1% rule. If you could buy a get 1% in monthly rent to the purchase price, like that was golden, but you haven't been able to get that in years, only because this one was it was a diamond that I found under pulling up 200 stones. You know what I mean?
And I want to point that out again, that appraised value, 700 grand, less what you paid for, you bought this at I think $170,000 discount. So that's day one, what you and your partners are walking into as profit on the buy. That's huge, right?
Yeah, that is uncommon, honestly. That was a smoking deal, but we always get, something undervalued, however much that might be. It depends on the deal.
Yeah. So that's all included in your 5-year appreciation, right? That's why that appreciation amount is so high there. Pete's taking into account they bought it undervalued. It's not actually increasing.
Well, this is the instant equity, and then we factored on like 3% of inflation afterwards. So pretty minimal. The reality is how much, appreciation we've seen over the last 5 years blows 3% out of the water. So like, it's just, these are just projections. What happens in the future over 5 years, over 7 years, rates go down in 5 years, you never know.
Yeah. So you're trying to be conservative and do your best to actually underpromise things for your investor partners. That's the goal, right?
Right. Yeah.
Yeah. Good points, you guys. So again, highly recommend you guys. I know it's a little bit nerve-wracking to dig in deep here in a public setting. So book a call with Pete. I put the link in the chat box there. Go ahead, book a call and just have a conversation one-on-one. Ask any questions that might come up between now and when you have the conversation with Pete. And then Pete's a no pressure kind of guy. You'll just kind of see what it's all about a little bit more in depth. You can dive deeper into the numbers if you'd like to, and just see what the next steps are. But yeah, I can tell you one thing. The investors that jumped on that last deal with Pete are happy campers. That's for sure. So yeah. Good idea.
And Pete, you said you found a deal already, or you're working on a deal on that same street?
Well, I just met with the seller for the first time today. Yeah. I don't know if it's going to go through, but we're going to play it out and see if we can get a deal that makes sense for me. And then I've got one other one, a 77 unit that we're just starting to look at as well. That one's got an assumable loan, which is kind of cool. So I'm just in the early stages. Sometimes it takes 3 or 6 months for these to come together. You start with a low ball offer and kind of see where they're at and see where it leads. And then a lot of times they stray away and they go try to find a better offer, and they find that it takes a lot of time and effort, and there's not a lot of buyers out there right now. And then they come back, and so it's a little bit of a game.
Yeah. And you need to have investors ready to go for when you get close to this deal, right? I mean, that's kind of your point. You got to have people that are saying, okay, I'm committed to $100,000. I'm going to jump in this project when you get the right deal. You're going to present the deal to me, and I'm going to see if this fits what my vision is, as long as, trusting your vision too, right?
Yeah, definitely. I mean, like one of these deals, if they come together and I got to close on it, I'll just close on it myself. I've got a bunch of other investors already that are pretty much ready to go, but I'm expanding my sphere. And so anybody that's not investing with me, I'm trying to bring in more people. So we'll open it up, but depending on the size of the deal, if it's a small one, there might only be a limited amount, but we'll open it up to everybody regardless.
Okay,
It's
it's exciting.
Yeah. All right. Well, good job, Pete. And thank you, everybody, for joining us tonight. Again, I highly recommend click on that link, book a call with Pete. If you're watching this as a replay, there should be a calendar below this video. You can just pick a day and a time there, and Pete will be happy to explain exactly how this all works in your situation. So good job, Pete. Well done.
Cool. Well, I appreciate you guys all jumping on, and feel free to give me a shout if you get any questions.
Thanks, Pete.
All
Thanks,
right.
Pete.
Thank you.
All right.
Good
Good night,
job.
everybody.